Hey everyone, welcome back to the channel. It's Demetrius here, and in today's video, we're going to be talking about uninterrupted compound growth, specifically in whole life insurance. And so I'm going to be walking you through a story of a gentleman that I've worked with recently who's done a really great job of saving money over the years, but he felt like his money was just sitting still. It was sitting idle, not moving, not doing anything. And so he's not somebody who wants to chase a high risk rate of return and all this sort of stuff. He just wanted his dollars to do more. That's pretty much it, right? But at the same time, he didn't want to lock them up or lose access to those dollars. So if you're watching this as someone who's disciplined, you're a disciplined saver, and you want more control and growth, this is going to be really relevant for you. So stay tuned. And if you got questions along the way, go ahead and just let me know in the comments. Happy to respond as quickly as possible. So I'm going to call him George for the sake of this video, for the sake of his own privacy and everything like that. But George, he had built a pretty solid amount of savings, like I alluded to earlier. And he did so primarily, for the most part, with bank accounts, high yield savings, things of that nature. Had a little bit in the 401k as well. We didn't really touch that money. He really liked the access and security aspect of high cash value, overfunded whole life insurance, but he really did feel like something was missing, which is why we started to talk a little bit more about that. He basically told me, hey, Demetrius, I've done all the savings and it feels like my money is just kind of sitting on the sidelines. It's not doing anything. And so again, that's why we had further conversations about overfunded whole life insurance. He was not looking to gamble his savings, right? He just wanted his money to be working harder. That's what he wanted. And he wanted to do so without sacrificing the control that he values a lot. And the reason this is the case is because not only does he work a normal W-2 job, he's a hard worker there and does very well in his own right, he's also building a business legitimately on the side as well. And so that's again when we had further conversations about high cash value overfunded whole life insurance, particularly as it pertains to the cash value, as that's one of the primary benefits or primary living benefits of these policies. And so it gives him both growth that he's looking for, because he was sitting stagnant, and it also gives him access because he doesn't want to lose that access because he needs the capital to grow his business. So he ended up putting about $30,000 per year into the policy, which otherwise would have been going to just a bank account for the most part. Not because of the death benefit. He didn't do life insurance because of the death benefit, although it matters to him, but not as much. But he did it because of the steady accumulation of cash that he could access during his lifetime. That's the reason that he did this policy. And so here's what a lot of people don't realize, okay? A lot of people don't realize that with a typical savings account or a brokerage account or what have you, every time that you use that money, you're not just hitting pause on the compounding, you're lowering the amount that you're compounding on. And so think of it like this. Let's say you're getting an average rate of return of whatever percent, doesn't matter. Your growth that's happening will actually end up happening on a smaller base because you took some out. That's the real cost right there of interruption. It's not just the time, but the lost growth potential on the dollars that you've pulled out. I hope that makes sense, okay? Because with overfunded whole life insurance, let me move my face out of the way here. With overfunded whole life insurance, in a policy that's structured the right way, meaning that it's designed with the primary purpose of cash value, in most cases, you don't even withdraw the money anyway. You're going to be borrowing against it. Now, I did say most cases. I'll make a whole nother video about when to withdraw and all this sort of stuff. But anyways, what this means is that your full cash value continues to grow even when you're using it somewhere else. Okay. This is the essence of uninterrupted compound growth, okay? And I want you to think of it like this. I want you to think of it like your home, okay? I think this is very familiar for a lot of people, whether you own a home or not. People know that you can take a home equity line of credit. You can take a HELOC, as many people call it, just for short. So as an example, let's say your house is worth $500,000 and you borrow against your home and you take $100,000 against it, right? Just because you do that, it doesn't stop appreciating, meaning that the value of your home is not affected just because you borrowed against your home, right? Make sense? So the value keeps going up even while you're accessing some of it, and your policy works exactly the same way. Your cash value is going to keep growing even when you take a loan against it, all right? And so here's what George really realized. He's like, hey, if I'm already saving this money, high yield savings or just typical bank accounts or whatever, why not put it somewhere that keeps working even when I tap into it? And that's what led him to commit putting $30,000 per year into this policy. It gave him growth, it gave him access, it gave him peace of mind, which are all of the things that he wanted Not to mention he could utilize it for the things that even mattered more, which was the business that he was building on the side. And so let me move my face out of the way once again. But anyways, I'll just say that this is what makes this strategy so compelling for those who are savers, right? It's not about chasing returns, because if you think about it, you don't have any control over what returns you're getting anyway, especially if you're just throwing it into the stock market. It's about increasing the efficiency of your savings, right? It's not about chasing returns, it's about increasing the efficiency of your savings overall, because your money is growing, right? It's still accessible, and it's never going to go down in value. And so something that's worth noting here is that this isn't necessarily a fit for everyone. Like, this video is not for the entire interwebs, right? But for those who are diligent savers who value safety and control and things of that nature. And so if you want to learn more about who this is for and who it isn't for, go ahead and download my free guide on whole life insurance and about how it actually works, and skip straight to that chapter. I think you'll find it helpful. And go ahead and let me know within that. It's my first draft of it. Go ahead and let me know like what other things that you would want inside of that as well, because I'm here for you ultimately at the end of the day. And I can think in my mind all day long about put all this, put this, put this, put that inside of the guide, and make it pretty much an entire massive book. But at the same time, I want you to tell me what you would want inside of a guide like that. But for now, go ahead to that chapter to see who it's for, who it's not for. I'm happy to serve in that way. It is 100% free, so don't have to worry about that. So, and I want to wrap this up though real quick about George with a pretty bow. If you're someone, again, who saves consistently, you want more out of those dollars, but you don't want to give up the liquidity, uninterrupted growth might be that missing piece inside of whatever your saving situation is. And so let me know in the comments what your take is specifically on compounding in general, uninterrupted growth in general, or simply know what other topics you'd like me to cover on whole life insurance, whether in this video or, like I was saying, in the guide that you can download for free as well. So thanks for watching. I'll see you next time.